We've seen a pullback over the past few weeks. What are you going through mentally, and what are you doing in your account? There are a few questions about: are you trimming? Are you looking to hold stocks that you have cushion in? How are you handling kind of an intermediate term potential pullback within the start of a potential new move? We don't really know what this is just yet.
Both. I have trimmed off. Okay, so a lesson. You mentioned Crocs. I had a gigantic position in Crocs on Halloween Eve, a
Halloween,
decade
I
long
remember.
ago, and it broke wide open. And I said, "Why? What did I miss here? Why did I get trapped in this thing?" And when I say trapped, I had 270,000 shares. Um, it was the weakest performer of my whole account. And I said, now, anytime we have a significant run in the market, I have to sell my weakest performer because there's a reason it's the weakest. So I trimmed off two names recently, completely got rid of the whole positions, which would be Palo Alto and ServiceNow. And then I am trying to hold LI and Nvidia and a couple others for the long term. I'm trying to sit for 4 or more beat and raise quarters, but I don't know if this is the right time to do that because the general market never quite got out of that transition in from bear to bull. So we still could be super duper early, or this bullish attempt could fail. So I bailed on a lot of Palantir today. I sold a ton of SMCI. I'm trimming now. Who knows what's going to happen? But the action we saw, the rate of penetration of that 50-day was way too steep. What are we looking at there? SMCI, yeah. And the volume explosion, they did not raise 2024 guidance enough. The reaction was just all I need to see. I forget fundamentals that I think I know. I'm like, if you look at Palantir, the market is calling bullshit on Alex Karp. They did not beat estimates, and the market, you should not look at the pullback before to the 21-day in June. It glanced it came down subtly, it stayed close to the 21-day. Volume was up a little, but it didn't go to Mars. The break today of the 50 was a character change here. So in spite of the fact, look, I've had CEOs lie to my face. I mean, directly meet one-on-one in the same room together. And when the market calls bullshit on these guys, you have to stand up and take notice. Doesn't mean it's toast. So I've reduced my position over 50% on this. I sold 80% of my SMCI. If these things tighten up and regain their composure, I could get back in. But I'd also hedged massively. The whole market, I'm long the biggest position in SQQQ I've ever had in my life, ever. So I had reduced position greatly. My LI position, I hedged down to 41. The options expire on Friday, so I've got to decide what I'm going to do here. But I think there's a chance because of PPD or PDD and NTES and the FXI that it's theoretically possible that against all odds, China might be trying to improve. So we'll see. But I think knowing what your highest quality merchandise is imperative because you cannot circle the wagon around 8 or 10 stocks. You can only circle the wagon around 2 or 3. So there's a long answer. I could answer any more questions though if you want.
Yes, speaking of, the highest quality names, Nvidia, could you talk about kind of how you've handled this year and what you're looking to do here? Because today is also kind of a nasty break right down to the 50-day area.
So when you had the reversal about 3 weeks ago on a big pickup in volume, the stock's not been the same since then. And I was debating, was an ascending base in process. Now, with the break of the 50 and the volume today, it really throws that into question. But I spent a lot of time today looking at Livermore's shakeout plus, I call it shakeout plus 10%. I think you may have a lot of opportunities if this market is real to use that, implement that rule to get into these leaders. And I'm talking about the first ones to come out at the bottom that were not the big FANG names. So I'm not sure if this is an ascending base, or is it too damaged? But if this thing comes back up through the recent lows plus 10%, I will add to my position. And on the gap up on earnings, that was such a monumental surprise. I said to myself, look, it's too powerful. I just have to commit to this thing. And I bought a bunch, and then I bought a lot more about a week or two later, on another, maybe like 4 weeks later, right about 425. So I don't have a massive cushion in this at all. And there's the answers for you. I'm waiting to see, but I think I'm no genius, guys. I'm a digestion breakout purchaser. So if this cracks that 460 level, rest assured I'm buying more. And if it cracks 475, I'm buying more. And through 480, I'll buy even more. And I'll if that occurs, I'm going to have a big, really big position, because I have a big position right now. I did trim 10% of it today, but I have so much confidence that, and this is the name, as this goes, as John said, so will the whole market. This is so much more important than SMCI. It's not even close.
And sorry, here we go. And there was a question earlier. You mentioned liquidity, and we've talked about this before. What do you consider liquid for you, and why is liquidity important in general for fund managers and institutions to get involved?
Because when you want to sell, and I am a mid-sized institution. I need someone to buy my shares. I need liquidity to get out when I want to get out. And I'm not a big trader. Like I trade as little as possible. I need to be forced into the trade. If you don't have, I don't ever want to be more than 5% of the average daily volume, which really precludes me as to what I can get into. Bill violated that a few times, where he was probably 10% or more of the average daily volume a couple times. And I have to totally explain, Bill was so aggressive. He used large margin, took very big position sizes, and he put himself in high risk positions, but he believed in the fundamentals enough to do that. And he had the experience. I mean, there's this quote I read, and I have it in my scrapbook. It says, education is pretty thin stuff without experience. And he had it. He was already a master veteran when I was, in 2000, I was just coming along. So anyway, there's a 20-minute answer. You have to have liquidity. You just do.
Perfect. And there's a question about CPI here, and how what you're waiting for and watching for if when that data point comes to life. So how are you incorporating the macro environment into your analysis of these stocks here?
Okay, so with the 2-year treasury, the 3-month bill is at least 1% over the current rate of inflation, which is high enough to kill it historically. But those are opinions. If this market continues to break, I don't care. They could say we're in deflation. And if the market continues to break, I will go very heavily cash, or at least remain greatly hedged. So CPI, PPI, both coming out Thursday, Friday. It's market action. If my opinion about global macro or about inflation or about anything means nothing if the general market doesn't corroborate my position. I'm listening to the market more than fundamentals, but I ultimately want to find the dominant fundamental factor. What is the market keying on? But I'm also have perspective that this appears to be a new bull. And I understand the longevity of a new bull and a bubble and a new innovation that is a tectonic shift in the way business is conducted. This is so enormous. And I am also cognizant of the fact that bull runs usually have at least 2 or 3 necessitated follow-through days every year. So this is only a 5% pullback. And it's always scary when this occurs. So keep your buy list fresh. You need to know what stocks are the very best. What's had the biggest run from the initial follow-through days, there's multiple of them. There's your shopping list. And if they start to firm up, you can't go, oh, yes, but inflation's reaccelerated.